Hello, everyone. Thanks for joining back again for this new panel. So this one is basically focusing on infrastructure and security, and I think this is a topic that is quite on the news recently. So very proud to welcome quite a set of panelists and OGs, I would say, in the blockchain space. So I will let you introduce yourself before we start. So maybe Kunbank, you can start.
Hi everyone, I'm Bang from Siqnal. We are developing a Web3 notification platform. The platform serves both retail and retail investors and also protocols. It's a communication infrastructure that allows protocol to communicate with each other as well as communicate with its user in real time and on-chain.
All right, thanks.
Good to see you, everyone.
Thanks for joining, Kunbank. You have been in the Thai crypto scene for quite some years, so glad to have you this one. And Steve, nice to see you in Southeast Asia on top.
Good to say I'm still alive.
Steve, nice to see you again and welcome in Southeast Asia. I think you're in Singapore.
Yeah, it's great to, first of all, to see the friends at Atato and reconnect and other panelists here. And to be back at ETH Bangkok, it's great to see this event growing every year steadily. And yeah, so just me, OG, I think is a good summary. 2015 as when my entry point into blockchain was personally, I'm the CEO and one of the co-founders of Kaleido. I started Kaleido in 2017 with a mission to take these technologies that are frankly a little hard for developers and for companies to work with and make them radically simple. And our focus has been, really building things that work for enterprise. So security compliance has been something we've invested in quite a lot through the years. But you can think of Kaleido as kind of like an AWS type platform for specifically for Web3. So we started with blockchain nodes and added wallets and storage, oracles, RPCs. We plug in with many other companies around, and a developer or a Web3 startup, just sort of like at AWS, when you start on Kaleido, you can get the same experience that, our clients that are large banks and, so central banks all the way through to Web3 developers are the sort of clients that we're working with today.
Yeah, thanks, Steve, and thanks for joining back again, because Atato and Kaleido have been working together for many years now.
Yes.
It was a completely different space, right? And to join the panel, we have my friend and co-founder of Atato, Guillaume.
Hello, everyone, and welcome, Steve and Bank. We're glad to be hosting this new edition of Ethereum Bangkok. And it's good to see friends again. And I can vouch for what Steve has said. If you're looking to run an L2 private, especially, you should probably check out Kaleido. In my opinion, the strongest product in that space today and for many years. Then for myself, so I'm Guillaume. I'm one of the founders at Atato. Atato is a custody and wallet solution provider. We're based in Singapore with teams in Bangkok and Hong Kong. I'm sure you've got an intro earlier from Max. So very happy to join this panel. As we have the custody and wallet side of the picture, we have the infrastructure and RPC and nodes and associated services with Steve, and then the dApp developer tooling with notifications with Kunbang, user notifications as well. So I'm sure we're going to have a very interesting conversation. So thanks everyone for tuning in.
Yes, and it's generally the infrastructure is not the most sexy panel in some ways, not because of you, but because of the title of it. But this is what basically makes blockchains growing, right? Before we go into more detail on what it is and the evolution, so I think the recent events that we have seen, especially this year, have put a focus on security and maybe a regulation or compliance. You guys are all working with institutions in some way or Web3 projects. Do you feel that the market has changed and the needs of the people building on Web3 changed recently due to the FTX issues or the Solana crash that we have seen? Steve, maybe you want to start and then Kunbang.
Yeah, sure. And just to be clear, Kaleido is servicing all industries. So we do have quite a bird's eye view, and we're available in many regions around the world across major clouds. So we do have something of a perspective, and frankly, it's one of the most rewarding parts of my job to work with so many great companies and innovators. To your question, I think it's maybe a little too early to assess the full impact of FTX and some of the other activities going on in the crypto space. I think within financial services, one thing that I'm observing is, I think the good news is, companies still understand that Web3 is the future, and that ultimately they need to evolve and adapt, or be left behind. So I think that hasn't changed from what I'm seeing. What maybe is starting to change is a mix of use cases that companies are looking at, maybe a little less native crypto. So thinking, for example, if you're a bank, you might be thinking, and custody was a first use case that you felt like you needed to have. Maybe you're thinking more about digital assets and accelerating some other use cases, or maybe having more of a mix across those use cases. The second thing I'd highlight is, enterprises, and you at Atato know this very well. Initially, in the early years, we're very scared of public blockchains and the ramifications of that. And that has changed through the years to, companies being open to doing things on public blockchains. And so I think for me, a question is, has that broader, has this change, is there a change there? And we're not seeing that yet, but it is something to keep an eye on. And how does this all fit with some broader changes that were already happening in architectures with layer 2s coming along, ZK sitting on top of that, things like app chains and layer 3s emerging. So I think it's a really interesting moment in time. But overall, I think our sector is going to be resilient, and overall companies are still investing in the space and still looking and trying to plot their course forward, but maybe a little bit of, hey, let's double check and think about this use case before we proceed, which wasn't there 6 or 12 months ago.
All right, thanks, Steve. And Kunbank, you are laughing because I think you have been there in the previous bear market. What's your view on maybe more localized in a Thai institutional ecosystem and so on?
So I would totally agree with Steve. FTX, also Luna, is a big wake-up call for every one of us, on both our builders like us and also on the regulator side. I think, and also that bring change in both negative and on the positive change as well. Negative change, for example, the existing regulation, that some regulation are currently loosened to make room for a transition period for both players and regulators that will be tightened. And also transition period will be shortened. Also, new regulation will be emerging, focusing on custody and how to protect customer digital asset, as like in traditional finance system is enforced right now. And also on the bright side, I see some enterprises leave, but those who stay will focus more on use case, more on product market fit, not just like anything with token or NFT. And also, I think the good thing is they will start to appreciate why transparency and decentralization are very important, especially in transparency that become mandatory right now with the exchange tag wallets or proof of fund. Mm-hmm. And lastly, I think it also bring the lesson to every one of us that crypto wallet and institutional grade digital asset custodian can be a great player to protect customer.
Yeah, thanks. And yeah, you're right. More educations and focusing maybe on product with more clear use case, right? But I think the elephant in the room that we have seen this year is basically security, right? I think a lot of people couldn't expect a large exchange to collapse, and basically keeping your assets on exchanges is something that people are going to reconsider. Guillaume, you are doing crypto custody, so you're addressing this issue right in front. So what do you think custody plays a role in institutional adoptions or even retail adoption?
So very important is the short answer, and the long answer is, there's been a lot of surprises in the space with a lot of CeFi companies collapsing. And I think it's probably making the news more this year because the numbers are now in the 1 to 10 billion range every time something like this happens. And this is something new for our industry. On the other hand, if you think about it as a percentage of what the whole Web3 industry represents, those events are smaller in comparison to things like, empty gogs, the DAO. During those times, in my opinion, Web3 was, dangerously close to stopping to exist. And although, it's catastrophic, the amount of people and businesses that have lost everything in those events, it still, in my opinion, has a smaller impact on the industry overall than, empty gogs or the DAO had during their times. Now, what's really clear, to go back to your question, is that I think there is an understanding that custody is vital. Short answer, and the long answer is that there are many businesses that entirely rely on digital assets for their ability to conduct business and just to exist. So people like brokers, traders, and unfortunately, some of them have disappeared and just stopped to operate in the fallout of those issues. And I think, custody is part of the answer. We need to have people using more custodial wallets and more self-custodial wallet if you're a tech guy. But, if you're a business or a non-tech person, maybe a custodial wallet is better, in our opinion.
And let me
and
just...
then it's not just the custodial wallet, it's also the ability for the exchange to work with the custodial wallet. That I think there's going to be some changes. And yeah, we're very much excited to participate in that.
Let me just rebound on what you said, because what we are seeing, especially those days on everywhere, on Twitter and so on, is that not your keys, not your coins. In which sense, like a custodian is different from a non-custodial wallet? And can you just explain a bit what a custodian is?
Sure. So if you think about the way you access your tokens and your coins on Web3, it's a spectrum, but on one side of the spectrum, you have things like leaving your coins on an exchange. When you leave your accounts on an exchange, what happens is that your money is pooled with other people's money, and you don't really have a way usually to verify that the exchange actually holds the numbers that you see in your own balance. Example, FTX, Celsius, etc. There is you don't know where your money is. Then at the other end of the spectrum, you have things like a Trezor or a ledger that you entirely control yourself. It's your address, it's your wallet, it's your private key. And then in the middle of this, you have custodial wallets. So what's a custodial wallet? It's a professional service that manages some elements of your crypto for you. For example, for Atato, the only thing that we can help you with is disaster recovery. If you lose your phone, you lose your accounts, you lose your email, we can help you regain access to your funds. But with us, for example, you still have your own Ethereum address. You don't have to take our word when we tell you how many tokens you have. You can go and check a block explorer or any other tool that you want to double check the history of transactions or the amount of tokens that you have. So I think, as people understand the risk associated with leaving money on an exchange, and also the complexity of doing it yourself with MetaMask or Ledger, I think more and more businesses and individuals will try to find a middle ground that has all these security advantages that you have with a solution like a Ledger, while having an easier user experience for non-tech people. And so that's what we're interested in building at Atato.
Thank you. And Steve, as you are dealing mostly with institutions, banks, and corporates in general, right? I guess the questions on security has been coming up quite often lately, right?
Absolutely. But frankly, banks and corporates were asking about security before.
Hopefully.
Yeah, and just going back to what Bank was saying a couple of minutes ago about a wake-up call, I agree with that. I think it's a wake-up call and a moment for reflection and the community as a whole. But you also mentioned regulators, and I think when we look back, the potentially the real wake-up call that we can measure is that regulators are going to move a lot faster now, and they feel like compelled to act. And I think that's actually a good thing. So I thought to pose to the audience here and to everyone, what feels like, hey, our industry is being set back by a few years. I just wonder if actually what we're going to get out the back end of this is an acceleration into more mainstream adoption. And Guillaume, we've been talking through our partnership about regulation for years now, and so I'm actually curious how you think about regulators, the wake-up call, and them potentially moving faster now.
Yeah, but I think it's Kun Bank has been discussing with regulators here in Thailand, and maybe you can share your views on what you think regulation is going to evolve in Southeast Asia.
I would agree with Steve and Guillaume that the first thing they're gonna enforce is how each platform will protect customer fund, and also on the transparency side that the regulators must provide a way to audit, even though it is not a full audit, but at least the minimum standard is provide a proof of reserve. Yeah, and also I think the regulation will be placed more on newcomer that are working on the project and want to launch their platform right now, because they don't want to repeat other people's mistake again. So I think it will be a bit harder for the newcomer right now.
So more regulations and more constraint in some way, but for the good of the general market, right?
Right, and also not only on the regulation, as well on the process to get the license. I believe it will be a lot harder and more documentation and process review.
Mm-hmm. And but going back to maybe the more general adoptions, I mean, Steve, Kaleido is working with Fortune 500 companies, not only in the US but everywhere in the world, right? Are you seeing a step down on adoptions as we might have seen in 2018, or is it like something different?
No, I don't. We're not seeing that right now. We're not seeing that yet. Again, I think it's a reassessment of what.
I think we lost Steve for the connection. So yeah, Guillaume, are you seeing some sort of adoptions?
No, not really. And I guess Steve will be better suited to talk about it, and he's back, so let's do that.
All right, go ahead, Steve. I think we lost you for a couple of seconds.
Okay, yeah, we're just not seeing the step down yet across the board. I think what we are seeing is a reassessment of which use cases are being prioritized, and the teams that are working Web3 strategies within companies understand the boom and bust cycles. They've been in place for some time now, and so I think what we see are kind of a more mature set of partners, customers, almost like allies within these companies that have self-selected into working on the technologies. I think it's, our customers want to talk to us and say, okay, here's the sort of use cases that we think we can get, make progress on this year, right? And maybe that's a slightly different set than they were thinking about 6 to 12 months ago. Certainly the climate within there, if you look at top 20 banks and those sorts of organizations, there are ripple effects that are going through as probably should be the case. And I think there's an opportunity for us in the Web3 community to, and for those entrepreneurs that will seize the opportunity to work with companies and can be agile and can help them adapt to kind of how the landscape is changing. But overall, we're just not seeing companies saying, hey, we're going to sit this year out, or the next 2 years out and wait and see. It's more, hey, let's figure out what we can do internally here and how we can keep moving, because I think people still believe that the end state of where they need to get to on a 5 to 10 year time horizon involves a lot of Web3 technologies.
Yeah, and I will rebound on this part. And Guillaume, maybe if you can enlighten people, like when we're talking about infrastructures, basically we are talking about blockchains, right? But what do you think are still the missing points for user adoptions on the infrastructure layer?
Yeah, so I think, unfortunately, there's a few. So we touched on regulation, and I think, today we start to have a comprehensive set of regulations if you're a virtual asset service provider, in my opinion, and we see signs of this in Europe, for example, with MiCA. The regulation will start to touch on non-virtual asset service providers. If you're a business today and you have $10 million in cash in your office, your auditor is not going to be happy about it. So why do we let you have $10 million in crypto on an exchange? That sort of simple controls, in my opinion, should be coming. And then, when we talk about what's missing at least on the Ethereum side, I think Vitalik last month, I think, posted the latest roadmap for Ethereum, and there is different tracks, right? But one of the big tracks is continuing to be scalability, with a goal of getting to 100,000 transactions per second, which is very ambitious, but also more and more achievable, given that there is a clear view on how to get there. I think also what's missing is, proper wallets. That's also one of the tracks on the Ethereum roadmap, with all the work around account abstractions. And I guess what's missing also is an agreement on what is proper wallet. Everyone has their own view on how to do wallets, and I think the industry needs to come to an agreement if we want that part of the picture to be addressed in a manner that satisfies everyone. And then, in my opinion, privacy is also the big elephant in the room that we're not addressing to the degree that people expect yet. And it's a different order of magnitude of complexity on the research and technology side. But I think if we want Web3 to get to 1 billion users, we need it. But I'm sure we can get to 100 million users without it.
Okay, and maybe some questions for you, Kunbank. I mean, you launched Siqnal, I guess, for that as well, but what do you think is missing on the infrastructure there to get the next 100 million users, as we say?
Wow, very interesting question. Then to answer this question, I think we need to start with who are the next million users. I think we are dealing with a mass adoption and a late majority user who are not very familiar with technologies. Also, they value easiness and accessibility over technology triumphs. So I think many things that we need more to serve them. One thing is more user-friendly wallets and key management tools. Also, better identity and on-chain credential system as well. Also, the data oracle that is more flexible, also more secure. And the integration that must be seamless between device, wallet, protocol, and also the dApp and also Web3 platform. And of course, notification. It is the backbone of every network that piece everything together. That's why we work on that.
All right, and I think not much missing, but Steve, did you had anything to add?
No, I think you covered a lot. How these, if there's 100 public chains out there or whatever the number is, how they connect together. I think bridges and interoperability, it's just really early, but it's really critical. I mean, if I to add one or two thoughts on, the broader kind of technology evolution, I think if you look at broad adoption, then it's really about Web3 developer stacks becoming mainstream, right? So how much harder is it to build a Web3 application than a mobile application or web application?
Yes.
So like, what's the gap there? And I think Bank was touching on, like if we can just have WebSockets and APIs and event streams and things people are used to working with, that gets us a long way there. I think at an even higher level, companies want to create experiences for their users, right? For their consumers. And so, being able to bring Web3 into their Web2 world and their experiences, rather than having this, chasm in between what their Web2 experience is and what the Web3 experience is. Like, I think we're there at mass scale adoption. If you look at it from an experience level, when you can achieve that. And that many layers down the stack, there are a lot of things that need to come together in the infrastructure to make that all true. And we called out a bunch of those from bridges to privacy, how ZK works, and up above on top of these chain infrastructures, wallets, event-driven programming models, and all those sorts of things.
Okay, thanks for sharing, all of you. And I will be a bit more specifically on Coinbank. I mean, for people who don't know what is notification and why do we need it in Web3, can you just clarify why you launched Siqnal and why is it important?
It is, I think, when we look back to the Web2 world, there are many notifications that going on without our notice. For example, the message between protocol or between app, and when we got notified through our registration with the platform, for example, email or chat. But for Web3, there hardly a way for protocol to communicate to the user, and also they can do registration, but not every user wants to do registration. And also token and contract signing is already registration, but there is no way that platform can collect that in real time and communicate that to the user. One good example that I think it is a good case is the DAO world. Yeah, everyone has a stake, but not everyone has time or effort to monitor all the DAO board that can affect their investment, and also on the project that they already participate. If we have a notification platform, it can communicate from DAO to the user and let them vote on what they think the best for the future of the platform.
Okay, thanks. And so another missing pieces for today's infrastructure, right? And coming back to custody, because for people, when we talk about a custody, the only image that they have is their bank, basically. Guillaume, would like to hear from you, like, why do you think custody is one of the most important piece of infrastructure for adoption?
Well, like you said, when you think about money, you usually think about your bank and your bank account. And what's the job of the bank? Is to abstract all the complexity of dealing with money in general, and all the security and compliance issues that come with it. Now, Web3 is something that was started by engineers, and everyone is comfortable when you're an engineer to set up a MetaMask or a ledger. And the do-it-yourself approach works for some people and is very much aligned with the value of, the initial decentralization goals of Web3. Now, what's clear now is that there is some potential benefits in terms of user experience, types of applications that we can build with Web3 that we are not able to deliver today because we do not have wallets for non-tech people. And so this is essentially what custodial wallets are. So they've been used for many years by exchanges. Most of the exchanges that you work with, apart from the one that collapsed recently, usually would put their money on an exchange. And why do they put their on the custodian? Sorry. In many cases, they are required by the regulations to do so. For example, in Thailand, regulations will require an exchange to place money with a custodian, and that's good. It protects the consumers, it protects the investors. But having the exchange as the middleman between you and your crypto has also some risk. And so more and more we're seeing businesses and consumers be interested in also operating their own custodial wallet. And that's the service that Atato provides. And that's how we want to, make our contribution to this piece of the puzzle.
Okay, thank you. And rebounding on what Guillaume said, I remember when we talked, Steve, you were saying that you are servicing enterprises, but you saw the needs of your clients basically evolving those past year. Can you share a bit about what was it like 2 years ago, and what are you seeing people asking today?
Yeah. Maybe just picking up on the custody thread and then going more broad from there. As Guillaume was saying, in the Ethereum blockchain, an account is everything, right? That's the thing. And a key is synonymous with an account. And so how those keys are managed are really critical. In addition to the crypto balance those keys or those accounts hold, those are also the identities of users or organizations. And so if you think about building applications, providing interesting, compelling user experiences, identity is an area that gets quite a lot of focus, and it's directly connected to custody and to key management. So in the crypto asset space, how keys are managed, whether you take control of those or whether you have a reliable third party managing, with a robust technology stack like Atato, you've seen different companies plotting out, their strategies there. And, over time, I think as in the financial services space, as banks, in particular custodial banks, have gotten more comfortable with crypto as an asset class, you're seeing them really invest more and think about what is a real viable long-term strategy, right, for them. And you basically can't build your first use case without some form of custody. So rightly so, that's an area that's gotten a lot of focus, I think, the last 12, 18 months with recent events. There's now a huge microscope placed on custody, and everyone probably is reassessing who the partner is that they're working with and what their strategy is and how that gets them there. I think more broadly than that, to your question, other changes that we're seeing in the space is we're seeing enterprises more open to building applications that directly engage and work with or on public blockchains, right? And that's something that just wasn't true several years ago. And so that's really fun and that's exciting. But again, to the gaps in the technology part of the conversation earlier, companies bring an extra set of requirements when they look at building things on permissionless chains.
Okay.
Can they handle crypto themselves to pay gas fees? How does, back to privacy, what sort of privacy or scalability can they expect or rely on? If you're building a mission critical system, it needs to work, it needs to always be on. And so the next generation of infrastructure and technology needs to come along to enable these sorts of users and use cases to really get to true production.
Okay. Thanks for sharing. And it's an Ethereum event today, so we are going to talk about Ethereum. I just would like to have your opinions. We have seen the surge of different chains those past few years, Solana, Cardano, and others, but we are seeing most activity still remaining on Ethereum. Do you think Ethereum has won the layer one war, if there was one? Bank, maybe you want to share?
Yeah, I think it's hands down. Ethereum is the winner of layer one, but what I'm most interesting in this story is what makes them win. Why Ethereum win? I think not purely because the technology of Ethereum. There are a few factors that make Ethereum win in this war. One is ecosystem. Ethereum has very strong, and I say it is strongest ecosystem in the dApp and Web3 and also smart contract. And they push the Solidity language as a de facto programming language for smart contract. That makes every developer and many platform support there, even though currently there are Move and Rust that are trying to challenge that, but still everything is based on Solidity. And last thing it is, it's standard. It pushed ERC20 is many ERC standard to the de facto standard, and every other chain have to follow that. I think that's a very good lesson learned why Ethereum win the layer one. Maybe good lesson for every one of us that building product as well as ecosystem and also layer two. That's my thing.
All right, no, actually you're totally right. It's the ecosystem and the developers who makes a chain wins. But Guillaume, you often say that Ethereum won this war, but you might be expecting others to pop up in the next few years.
Yeah, so I mean, I agree with you and Bank. It's the community that in the end is deciding who's the winner. And I should preface my answer by saying that since 2018 we've been very vocal at Atato about why Ethereum is the best choice. But did we win the war? I don't think so. I think we've won the first few battles. So, for example, the battle of the application layer, as Bank was sharing, have been won clearly by Solidity and the EVM or the Ethereum RPC. I think that is very difficult to contest this right now. I think the battle of public blockchains has been won by Ethereum also as a L1. I think that's becoming reasonably clear with the clear roadmap and countless example of layer 2 built on top of it. But there is still a battle that will happen, and it's the battle for privacy. And I think that today there is no clear winner because we don't even know who are the contestant in that battle, frankly. But to me, the layer one who will win the blockchain war overall will be the one who will address privacy. I think it's not a battle that's going to start anytime soon, but it's one that we need to watch for, in my opinion.
All right, thanks. And Steve, do you agree? And more broadly, what are you most excited about for the Ethereum ecosystem in the next 2 years?
Yeah. Well, we at Kaleido, we always say we're not religious, right? So we pull in all the technologies and chains that companies want to work with. That said, to the question on Ethereum, is it special in the community and the broader ecosystem? Yes. And it's increasingly difficult for me personally to see it not being special, even on a longer time horizon. But I will say this, like the future is multi-chain, and the end game architecture is multi-level. So in a world where there's multiple layer ones, there's multiple layer twos attached to layer ones, and frankly, I think there will be layer threes or app chains as well. In that architecture, is there a place for other layer ones to, for example, have specific utility or be fit for purpose for certain things? I think we'll get there, right? But is Ethereum the ultimate system of record if for example, you're establishing a coin or doing very important things? I see it continuing to be that. How fit for purpose things like privacy, like Guillaume was mentioning, how those fit in, and other chains come along, and what that broader landscape ultimately looks like. I think there's still plenty of opportunity for other ecosystems, for other technologies to come along and build out a more complete picture.
All right, thanks. And same questions to you, Bank. You already mentioned some of them, but what are you most excited for the Ethereum ecosystems in the next 2 years?
I think that will be, I believe dApp, and also dApp has already established their footprint in DeFi, but I think in the next 2 to 3 years, it will go beyond financial service. Also NFT, it already established their space in art and tickets, but I believe in the next 2 to 3 years, it will go beyond that and become more like identity, proof of a credential or something. Also looking forward to Shanghai upgrade so I can withdraw my fund. Right?
Okay, so it's a very valid point. So Guillaume, to end this panel, what are you most excited about Ethereum?
I agree with Kunbeng, and you know, in 3 years we'll be in 2026, right? So in 26, Bitcoin will be able to drive legally, soon be able to drink legally, right? And then Ethereum will be a young teenager. So, you know, it's going to be a long journey when we look back. No, but practically, I think in 3 years, I think that tech-savvy people will regularly use Web3 dApps in some fashion for some use cases. Personally, I'm very interested in what's happening with social media and messaging spaces, given that we have just enough capacity right now. And also, I think there's a growing concern for centralized social media and messaging tools and all the issues that come with them. I think it's still going to be limited to tech-savvy people. I think they will still know that it's Web3, as you know, Steve was saying. It's a long way until the UX abstracts all of this for you, and you don't even know that you're using a Web3 dApp, which is the end goal. But you know, it's going to take us a bit more than 3 years. But I think we'll be at a point where our friends who are tech-savvy will be using Web3 regularly, and it's not just going to be, you know, Web3 industry players who are using it every day.
All right, but thanks for the word, and yeah, looking forward. Thanks a lot to all of you for participating. I know talking about infrastructure and security is not the most sexy part of the Web3 ecosystem in some way, but it's likely to be the most important. So really appreciate you guys taking the time to share with us. And we are going to go a bit deeper on the next panel. It's about layer 2 with consensus, scroll, and Starkware. So we're gonna go a bit deeper in the tech, but I appreciate Kunbeng, Steve, Guillaume. Thanks a lot for joining. And yes, thanks again.
Thank you, everyone, and thank you for the
thanks, everyone. Good to see you, Guillaume, Steve, and Max. Bye.
Thank you,
for
Max.
the question that is in the chat. We will take it on the panel for layer 2, given that the question relates to layer 2 also. Thank you very much.
All right.
Steve, Max, talk soon.
Thanks a lot. See you in 5 minutes, everyone.